Good morning, everyone. Welcome to this emergency market flash regarding the South Korean financial landscape. It is Monday, the 8th of June, 2026, 9 a.m. in Seoul. We are witnessing a significant volatility event triggered by a perfect storm of global macro shifts and local liquidity constraints. Over the next few minutes, I shall walk you through our strategic analysis and Bayesian risk updates to help you navigate this precipitous opening. Let us look at the headline figures. The KOSPI has suffered a staggering 5.54% decline, currently sitting at 8116 level. Most alarming, however, is the currency. The Korean won has breached the 1,559 level against the dollar, a depth not plumbed since the global financial crisis of 2009. Combined with a spike in US 10-year yields to 4.53%, we are seeing a violent de-risking phase across all major asset classes. The intraday chart tells a story of absolute vertical breakdown. At the opening bell, we observed a massive mismatch, where foreign passive selling completely overwhelmed local retail bids. This led to the activation of market-wide circuit breakers. Whilst the headline drop is severe, our analysis indicates an isanqueri, or a broken link in the semiconductor chain. Despite the price crash, the underlying demand for AI remains robust, suggesting that current prices may be detached from long-term fundamental value. The primary catalyst is the Friday payrolls data from the United States. A blowout figure of 172,000, nearly double the consensus estimate, has forced a hawkish repricing of the Federal Reserve's trajectory. Although the market is reacting with fear, it is vital to note that this is a supply-side expansion. Unemployment remains stable at 4.3%, yet the dollar index has surged to 100.07, sucking liquidity out of emerging markets. The won is currently underperforming almost all regional peers, with the exception of the ruble. We have seen a 22 trillion won net sell-off by foreign investors in just 4 trading days. This currency contagion is the single greatest risk to the KOSPI's large-cap constituents. We are monitoring for potential central bank intervention, as the current exchange rate creates a significant FX loss trap for foreign institutional holders. To simplify the chaos, we have categorized the market into 3 logical chains. Chain A, the macro link, is effectively broken as yields drive irrational selling. Chain B, the AI and semiconductor core, is showing a fascinating divergence. SK Hynix is expanding capacity whilst its stock price craters. Chain C, sentiment, is behaving as expected. Total panic in the KOSDAQ as retail leverage unwinds. This categorization helps us identify where the true value is being hidden by the noise. In moments of panic, we must look to contrarian logic. Kevin Hassett, the former White House advisor, has rightly pointed out that strong jobs growth without wage push inflation is actually a positive signal. He suggests the Fed has no reason to hike. If we accept this premise, the current market reaction is a phase 2 initial shock, a classic overreaction driven by the cognitive bias of fear. Our impact matrix quantifies the current stressors. The US payrolls surprise remains the dominant force, with an impact score of 95. The meta-dilution rumors and Middle East tensions add further weight to the bear case. However, we are eyeing the SK Nvidia brief by Chairman Choi later this morning as the potential intraday catalyst for a relief rally. Investors should monitor the decay rate of these shocks closely. Applying a Bayesian update to our T-1 forecast, we have recalibrated our probabilities. We have assigned a 55% probability to our base case, where the KOSPI finds a floor between -1.5 and -3% as semi-buying stabilizes. The bear case remains a significant threat at 35% if the won breaches 1,565. The bull case is a tail risk at just 10%, requiring an immediate reversal in the US dollar. Strategically, we are moving to an overweight position on the HBM value chain, specifically SK Hynix and Samsung, once we reach Phase 3 reevaluation. We remain neutral on financials, which may benefit from high rates, but face rising credit risks. We are strictly underweight on retail-driven growth tech and domestic consumption, as the inflationary pressure on the Korean household is becoming untenable. For the active trader, execution is paramount. We recommend a maximum exposure of 40% of total assets, maintaining a high cash bias. Our hard stop loss is set at the 8,000 KOSPI level. We suggest avoiding any buys during the opening gap down. Wait for phase 3, expected around 11 a.m., to confirm if the SK Nvidia brief provides the necessary support for a tactical entry. Thank you for your attention during this volatile period. We shall remain in a high alert state for the remainder of the session. Please remember that these scenarios are based on quantitative modeling, and the final decision rests with the investor. Are there any questions regarding our specific support levels or the Bayesian recalibration?